So starting in August of 2020, Optionsplay and my team started doing more research along the lines of electric vehicles, ESG investing, and specifically around renewable energy. And when we started putting out some of this research, I got a great question from a client asking why out over the past 2 or 3 decades that we've been talking about climate change and the different initiatives that have been passed over the past few years, why is it only in year 2020 do we feel that renewable energy and electric vehicles are investable now? So in today's video, I want to review what has changed in this previous year that has driven us to be so bullish on this particular theme going forward. Now, looking at year 2020, it's been an extraordinary year by all measures. We have just gone through a global pandemic that is still ravaging a good portion of the world right now. Yet during this time, during this extremely difficult time for global companies and countries, we have enacted some pretty phenomenal initiatives. 8 out of the 10 top economies around the world have committed to being carbon neutral by anywhere from 2050 to 2060. Now, from my perspective, given the fact that climate change has been in a discussion around the past 10 to 20 years, this has marked a pretty significant shift in a single year, especially given the fact that it was during a global pandemic. Now, what's interesting about this as an investable theme is the perspective of when governments put on these types of initiatives and you have the combination of a global recession, this type of spending, this type of infrastructure spending towards moving away from fossil fuels to renewable energy or clean energy, that is the type of investment, infrastructure investment in the trillions that can typically pull different local and global economies out of this recession. And that is why I think 2021 marks a turning point for renewable energy and this theme as a whole. Now, in the research that we're doing, we are splitting this up in the month of January for our research into both electric vehicles as well as renewable energy. These are separate portions of research that all fall under the renewable energy or clean energy or green energy initiatives or ESG investing that a lot of investors are looking at. But we wanted to take a deeper dive within each specific segment. And if we include the fact that Joe Biden has put together a $2 trillion 4-year plan for renewable energy, that represents a significant amount of infrastructure spend for the United States, and it would actually move it to 9 out of 10 of the top world economies would be committed to a carbon neutral footprint by 2060. Now, if we look at the electric vehicle space, what has really shifted for electric vehicles, I would say that turning point happened somewhere between 2019 and 2020. And it all comes down to the cost of the production of batteries. When batteries are significantly more expensive and the manufacturing cost of electric vehicles are significantly more expensive than internal combustion engines, that's where the economies of scale do not work in favor of electric vehicles. But 2020 represents a year, a pivotal year, where the cost of an electric battery for cars reached $100 per kilowatt hour. That was the threshold for electric vehicles to compete on price with internal combustion engines. And that is the pivotal shift that we expect the cost of batteries will continue to decline by another 30 to 40% by most estimates over the next couple of years. That could reduce the cost even further and would accelerate the opportunities here for electric vehicles. Now, in the short run, over the next 4 to 5 years, we only expect battery electric vehicles to represent about 12 to 15% of the market share, where right now it only represents about 3%. But by 2040, we would expect battery electric vehicles to be about 75% of all cars sold by 2040. So that is the big opportunity that we are investing in right now, which is actually just at the beginning of this trend. Despite when you look at many of the electric vehicle manufacturers, whether it's Tesla, NIO, or even the smaller Chinese electric startups that are trading at what we would consider eye-watering valuations, but when you look at the opportunities going out the next 10 to 15 years, the valuations and the market share that they currently own is actually a very, very small sliver of the larger opportunity. When we then focus our attention towards renewable energy, there are quite a few other industries that we can take a look at, whether we're looking at solar or wind or battery electric, to the more speculative technologies like hydrogen fuel cell. Those are the opportunities that we're currently reviewing on the renewable energy side. But in the short run, the main focus is really going to be on solar because it's cost effective. It's something that we can implement on a large scale right now, and using the existing battery technologies, we can take that energy that's stored during the day and reallocate it or reuse it at night. But if we look at the longer term opportunities, that's really where we want to look at the battery technologies that would allow us to store more energy in a more cost-effective way, as well as on hydrogen fuel cell, which is really an emerging technology. So if you found this information useful, I'll be hosting a series of webinars to discuss the emerging trends of electric vehicles as well as renewable energy. If you have not already signed up for this, you can register for a free account at optionsplay.com, and we'll send you notifications when we host these events. If you found this video useful, please hit the subscribe button to our channel, and please leave your thoughts below in the comment section as to what your thoughts are with investable opportunities within clean energy, electric vehicles, or just the general ESG investment space. Thank you so much for watching and have a great day.